Look, I think the RBA, in fact, most central banks have telegraphed their rate rises quite well. So I think the stock market has, I guess, taken on board their guidance over the last few months. And, I guess you look at the price action today, especially the banks, it's been pretty muted. I think it's all in the price in a way. We've seen the banks report, a growing NIMs over the last few months, and that's because of that rising cash rate. And I guess there's no surprises there on today's front.
Yeah, but you're seeing a move on the Aussie dollar because of this rate hike. It was up and active even yesterday, so about 0.3%, which would be, I'd say it would be decent, not hugely meaningful and market moving, but that spike reflects that the market is absorbing this rate hike into the currency cross. What stands out for me, Jason, is the RBA accepting that growth is looking okay, but going forward, inflation is continuing to stay too high. Inflation in Australia is high, and they expect a further increase in inflation over the next few months. And so how do you know these rate hikes are working?
Yeah, well, especially in Australia, you can't really see the retail slowdown yet. I mean, you can sort of see signs of that in the US and in fact across other developed world markets. But Australia, in terms of the consumer spending, is actually still quite resilient. And there's little things that we monitor, such as containerized traffic into Australia, and that's been holding up very well as opposed to the US, where that's been slowing. So I think it will take a bit of time for, I guess, some of these economic indicators to show up, to highlight that, eventually the rate hikes will slow the economy down.
Will slow the economy down. When do you think?
Look, I mean, there's a lot of talk about around the first quarter of next year, probably around March, if I had to sort of guess. Do you think about the consumer spending that's been fairly resilient so far? When a lot of the mortgages come up that actually shift from the variable rate to a fixed rate that they're paying right now to a variable nature, I think a lot of borrowers are going to feel a big pinch in terms of how much they can spend in the local economy. So around first quarter next year, I think you'll see some effect in the Australian economy.